The Morgan Report with David Morgan.
Welcome. This is David Morgan with the weekly perspective for the week ending 22 November 2019. Well, let me start with an announcement for all paid members, and I'll move on to the update. You have asked, and we have listened. We are phasing out our desktop instant alert system. Our current instant alert system is only available to Windows PC users, and we have received a lot of comments over the years from those of users of Mac, Linux, iPad, iPhone, and they can't receive these instant alerts. So we have listened and we have responded. We have created a TMR instant alert text service that goes directly to your phone when we post important Morgan Report updates, alerts, and announcements. No more delays, missed emails, or missed opportunities. Text messengers are one of the best ways to keep everyone in the loop, especially if the message is urgent. And when you receive a TMR text alert, you can choose to view it and act on it at your own convenience. There's nothing you need to do right now. In the next few days, we will be sending you details on how you can join the TMR Instant Text Alert System. And by the way, it's voluntary. If you are a paid member, you can elect to use it or not. It's up to you. If you elect not to use it, you will get the standard email alerts regardless of what platform you use. And of course, this system is for members of the Morgan Report, and the new system will be a method that allows us to send important members updates and practically in real time. So you don't have to join anything if you're already a member. The alerts will come to your phone regardless of, where you are as far as area code or whatever. It's not for U.S. only. It's worldwide. So be on the lookout for our announcement. So let me get on with the news here. And that has to do, as I do almost every week, with the stock market. Usually the U.S. stock market, and right now, in the middle of the week, about the 20th or so, stocks started to pull back. Certainly, basis the relative strength index, the Dow Jones Industrial Average, is certainly up in overbought territory. So some pullback is expected really here. And it started to do so on the 20th. And there's not much else to say. I mean, it's overbought and has been for quite some time, but that doesn't mean it can't push higher as it has been. But it does and is showing some breadth weakness, meaning that there's fewer and fewer stocks that are making new highs on strength versus the overall market that's kind of lollygaggling along. But nonetheless, fact is a fact, and we have seen new highs recently. Well, first article up is from Mishtalk, title, 250 trillion in global debt. How can that be paid back? Good question. A couple of graphs here to look at, as you can see on the left side. If you look at household debt, it certainly has gone up from 2006, where this information starts from, but really not that significantly on a percentage basis. If you look at the non-financial corporations from 2006 and now, I wouldn't say it's doubled, but almost. And then government debt from 2006 to present, certainly close to having doubled. And corporate debt has gone up, but not as much significantly. But when you add all four together, you're looking at 2006, looking at about 125 trillion global debt, and now it's doubled to 2019 to 250. Can it be paid back? No. Will it be paid back? No. Will it be defaulted upon? Probably in some way, shape, or form. What will that mean? I mean, a huge readjustment to everyone, almost everyone, unless you're Amish or you're Aborigine or you're a native living off the land, basically. Lots to happen. No one knows the exact outcome, but it's a very interesting, at least a thought experiment. And of course, the big question is always when. It's not going to happen for a long time. You guys have been saying this over and over, and on, and I get it. We have been saying it for a long time, and it hasn't happened yet. And will it happen, sooner or later? I really don't know. I suspect strongly that we don't have many years left. So act accordingly if you agree with me, and if not, then you're probably not going to listen to this podcast anyway. Just a real brief one here, and that is from Reuters. A U.S.-China Phase 1 trade deal may not be inked this year. That's pretty well known without even Reuters explaining it or writing an article on it. This thing just is like a ping pong ball going back and forth. It's pretty close, and it's not. It's important, of course, but probably not to the level that most people in the financial community actually think. It will have some impact, and obviously it is having impact. But greater than blaming the slowdown on the trade war, there's a lot behind the scenes, as I say every week, about the debt situation, the climate/food problems ahead, and also a general malaise in the financial system overall. There's a lot more being stated all the time about how things are not working as needed for the financial system at large. I really like this one from Market Watch. This is an opinion piece. You better believe the Fed is doing quantitative easing, and here are the beneficiaries. Federal Reserve's balance sheet is on track to rise to a record high by mid-2020, creating fertile ground for risk assets. The Federal Reserve maintains that its recent repurchase agreement activity, as well as buying Treasury bills up to $60 billion a month, is not QE or quantitative easing. But if the Fed's balance sheet is growing, and so are the excess reserves in the banking system, it is the very definition of quantitative easing. So we're going to call it QE4. I'm going to let you read the article on Market Watch. It's a good one. It's not very long. Who's the beneficiary? Well, the people that print the money. The people that print the money and receive it first. And we know that those are the banking elites. Big surprise. How rare. The theme continues. But again, it's getting near the end of the road as far as all of us are concerned. Dip into the cryptocurrency world. It runs sort of hot and cold. This is another Reuters article, roughly 400 million of Ripple tokens tied to illegal activity. So a lot of, let's say, more establishment/mainstream proponents even talk about Bitcoin being used for illicit activities. And, if there's illicit activities used with regular currency of any stripe, gold has been used in illicit activity. I mean, any means of payment can be used for illicit activity. So to sit there and kind of focus on one or the other is actually not logical. But of course, it's something that is a pablum for the masses so that they start to think negatively or positively, depending on what the powers that be want to slant and get into people's heads. But Ripple, more of a bank-generated crypto, is kind of interesting because even there you've got this problem with quote-unquote illegal activity. And I try to do these every Friday. Sometimes I do these on Saturday, so you have the weekend. If you're going to read one blog, this is one I absolutely tell you is a must-read, Our Finite World. Do the world's energy policies make sense? It talks about, and I'm just going to go through it quickly. You should study this really, but the CO2 world emissions, you can see obviously they've been climbing up for decades. But what's interesting when you break it out for the Soviet Union and the US, EU, and China and Japan, US, EU, and China. I keep saying China. I've got to slow down. The US, the EU, and Japan, basically flat. Russia, basically flat. And of course, just going up, up, up is the remainder. And that's basically China because they got a pass on the pollution situation from the World Trade Organization. Just look the other way. So, and population by parts of the world, you can see again that the US, the EU, and Japan are flat, Soviet Union flat, the remainder increasing substantially. As you can see from this one, the third one I'm showing here, rich countries have become more forested while poor countries have lost forest. I think another interesting one is the inflation-adjusted oil price going from January of 2004 to present day. You can see it's basically in a downtrend. What's interesting is the price on inflation-adjusted terms peaked in, let's say, 2008, whereas silver peaked about 3 years later. But there is a correlation between oil and the precious metals, believe it or not. So this is a good thing as far as energy costs are concerned, but it also depletes the ability or the extra capital required to go out and find more energy sources, at least conventional ones. which I'll be coming to here in a moment. And this is the world energy consumption by fuel. So you can see from 1966 till present day, oil consumption's rising, no big guess there. Same thing with natural gas, same thing with coal, same thing, although slightly, is nuclear, hydro, and then you can see the renewables, wind and solar, just barely visible right there. So this is more people on the planet and more energy used, and more energy used per capita, because energy is basically how everything gets done, and the richer a country or populace becomes, the more energy they use. The push toward renewables makes little sense without a firmer foundation than currently exists. Early studies looked at the cost of renewables themselves without the cost of extra long-distance grid transportation and battery storage. Such an estimate makes renewables look far more valuable than they really are. And believe me, I want a solution too, but we have to be objective, we have to be truthful, and we have to really look at the facts. And what this man is stating is true. We now have enough experience that we can see what goes wrong. A hydroelectric plant that operates during the wet season in a tropical country may be of little practical use, for example, if there's no fossil fuel energy available to provide backup electricity production during the dry season. The total cost of overlapping systems needs to be taken into consideration, including the need to hire staff year-round for both the fossil fuel and hydroelectric facilities. Electricity transmission will likely be needed for both types of generation. There are many other real-world examples that can be examined before blanket, quote, unquote, use renewables recommendations should be issued. If renewables are not truly very inexpensive, around 2 cents per kilowatt hour or less, without subsidies, they are likely not to be long-lasting. True economic picture here. So there's been some really good news on this EWaste company that I've been talking about for so long and have on the front page of the Morgan Report. Really, if you invest in this innovative technology stock, not only will you be known as a visionary stock investor, but this one company could enhance your retirement, your savings, and your wealth, because investing in this one company is probably the best speculative discovery I've seen in the past 40 or 50 years. It's also a major breakthrough in clean technology. I spoke with the CEO this week, near the end of the week, and there is a metal. It's not nickel, but it's in that category. It's not a precious metal. It's a vital metal that now is coming out in process, and that metal alone in circuit boards, in printed circuit boards from computers, smashed up and going through this process, yields about $700 per ton, and that's just that one metal. That isn't counting the gold, the silver, the PGMs, the copper that you get out at the beginning of the circuit, and everything else. So you can imagine that this thing is almost like hyperbole, that this is like too good to be true. And believe me, I've talked to people and they kind of blow me off because it does sound too good to be true, but facts are facts and they speak for themselves. Company spokesperson spoke at the United Nations recently on sustainability, and there was some very big interest by nation states wanting to recover their electronic waste. So lots happening. It's still at a price less than the buy limit I put on about a year and a half ago. So if you're interested in what I consider to be one of the best speculations I've ever seen, it's basically a technology stock more than a mining stock, although it applies to both, that there is an opportunity here that I haven't seen come along that often. And that's from someone that invested in the cellular phone industry in its infancy. This was before anyone hardly even knew about a cell phone, and those that did, they were great big, almost suitcases the size of a shoebox or thereabouts. So for someone that's had an investing experience that I've had for a long, long time and been successful over and over and over again, not meaning I don't make mistakes and take losses, I do, but the winners have certainly beat out the losses substantially over the years. Here's something that I do suggest for your consideration. Will it stay around this buy limit for very much longer? I do not know. I suspect not, based on the UN meeting, based on a couple of announcements that will be coming out in the public sector, based on a new IR firm and a new IR person at the company, and based on the fact that many people are starting to come into knowledge about this, and the mining companies that are using the process all have NDAs, non-disclosure agreements, so they can't really say much about it. But once those non-disclosure agreements go through the process of how many months, years, weeks, whatever, they have to keep their mouth shut. Believe me, you may hear some pretty big names making some pretty big announcements about this process. So you have it. I will be back with you next week. Remember, there's nothing more powerful than the truth. Not your truth, not my truth, not your subjective truth, but the truth. I'll be back with you next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot in speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.